All right. There are a few technical issues going on right about now. Let me just check if everything is good before we can proceed. Yeah, I believe everything should be great. All right, great. All right, great. Yeah, I just did that twice. All right, guys. So welcome to the live stream where I outline my expectations and what I want to see in price and how beautifully it did react to the levels which we discussed in the previous session. All right. So let's actually get into it. I just need to make a quick pause before I do. So do bear with me. And yeah, I believe we're good now. All right. Great. So let's start with dollar index. All right. So dollar index in the month of June, right? That's what you need to focus on. So the month of June, you can see we just opened here and expanded all the way through and we closed right here. Okay. So the fact that we did expand in the month of June means that the following month, which is July, is going to be more of consolidation. All right. So in this case, what do we have here? We have price react beautifully off of the monthly open. All right. So it's quite important to note down your monthly opening prices when you're trying to determine where price is going in terms of the daily direction, right? So a simple way to do it would be if price is, let's say, below the monthly open and you are bullish, that is when you're supposed to buy. And if you're bearish, you need price to be above the monthly open, all right? So what is this fair value gap? So this is a gap we did discuss in the previous session, and that was the monthly fair value gap. All right, so you have a monthly fair value gap outlined right there. We called the move all the way through here and we expect price once again to push higher. Okay, now where is going to move higher to take out a key liquidity pool, right? So what is that? That is going to be your previous monthly high, okay, which is right there. So that is where price will most likely get to because we have an open low, right? So that's how we're going to frame this as. So price will most probably take out the previous month's high. So we can just outline that as the previous month's high. And we want to see price push towards this fair value gap. All right. So whenever we have a nice fair value gap and we have a high or a low right below it, right? Below or above it. In this case, we have a previous month's high and we have a monthly fair value gap above it. This just means that price will be more, how do I say this? It'll be more likely to push higher, all right? It wants to fill that gap while also taking out liquidity, all right? So why does this work is because usually when we have a defined high and we have a breakdown of sort, right? So retail would actually see this as they have a defined swing high and price opens and moves lower, right? So this is signaled bearishness, right? In terms of retail concepts. So they will most likely be looking for shorts, and where would they place their stops? Right there, all right? So they would also see this gap, right? This fair value gap right there, which we have it formed all the way through here. What are they going to see it as? They're going to see it as resistance of sort, right? Prices moved really quickly and it will not really get there, right? And they'd want to see price move lower. And this will play out perfectly in the way we want it to play out, where price has tapped into a gap. It's below the monthly open. We've really pushed into it and we should see price expand higher, right? Now, is this a confirmation that we're going to move higher? Not yet. All right. I don't really believe that this is when price will start moving ahead from here because this is just the first week of the new month. All right. So you do have 4 weeks in a month. So we should really wait it out. All right. So as of now, what do I see here in price? I see that price has engineered liquidity at these lows. All right. So price will most likely take out these lows or probably push into this daily fair value gap, right? Price will probably get there and then we can look for a long. All right, so this is what I'm seeing as of now. How did I frame this? Really quite simple. I'm just taking out the recent dealing range, right, which is from this high to this low. All right, so you have the 50% right there. So we know that whenever price is below the 50%, that is bullish and we should see higher prices, right? So in that same case, what do we have as an array? We have a fair value gap in discount, right? So if price is going to get there, we are most likely going to be bullish and we will target higher prices, all right? It's quite simple. So let's move to euro to see how this outlines with what we are framing as of now, okay? Now the first thing to note when we're discussing euro is going to be the SMT divergence that we just observed, all right? So a beautiful SMT at these lows, all right? And we have taken out liquidity. So in this case, when you frame your SMT divergence, you always want to watch price and wait for it to take out liquidity first, all right? So this is a mistake I see traders do all the time, right? You just want to mark out SMTs at every single high and low, right? So a news flash for you guys, SMT is there at every high and low, all right? Every significant high and low, you will definitely find your SMT divergence. So how do you filter them out? How do you know which one works and which one doesn't? It's quite simple. You need price to take out liquidity first, all right? Liquidity is always going to be the first thing you ever pay attention to. So in this case, we have equal lows, right? Let me just move this SMT right there. We have this low right here and this low right here, all right? So these are equal lows right there. So when price pushes lower, and we are bearish all the way through, and we called out this move as well. Really, it's all recorded in the live stream. You can check out the other sessions, but we moved lower here, right? Why were we bearish? Quite simply put, these are equal lows, right? So price has taken them out. And after that, you need to look at your correlated pairs, right? So in this case, we did, and there is an SMT divergence, all right? Now, when the SMT divergence is here, and we checked this out in the previous week, we also had this beautiful weekly fair value gap right here, all right? So this was our draw on liquidity, and this is how you really frame where price is going to get towards in the higher time frames, all right? So we have a monthly open, so we can expect price to push higher, all right? Now, is that still going to play out? The answer lies with its correlated pair, all right? So look at GBP USD, all right? So we have the same SMT divergence here, which we discussed in the previous session. You can see that price is already expanded higher, right? You can see it's already pushed through, right? And what does it do here? It is already opened here on the monthly open and tapped or really close to the previous monthly open, right? So what does this signify? This signifies that GU is bullish, all right? So GU has really pushed higher. And what does this mean for euro and how you're going to frame what euro is going to do? Every time you have an SMT, you will have a reaction from that particular level, right? So you have an external liquidity taken out here. We have SMT. So price really needs to push to internal liquidity, right? It's basic concepts. So what is the internal liquidity? On the daily time frame, we have a daily fair value gap. That is where price needs to get to, right? And it has, all right? So GU has completed what it was supposed to do, right? So the buy model has been completed on GU. So because it has already been completed on GU, it doesn't need to complete it on Euro USD as well, all right? So if one of the correlated pairs does that, then the other correlated pair does not need to do it. So on Euro, price does not need to get to this daily fair value gap, all right? The same exact fair value gap we just looked on GU. For euro, price doesn't need to get here, all right? So that is the key here to determine which SMT works, all right? So in this case, let's say you've watched euro and GU play out and you say euro push lower, right? And if you're wondering, we did have an SMT on euro. Why did it move lower, all right? Probably saw this as an inversion. You took a buy and you expected price to move higher. It didn't, all right? The reason for that is because of how buy models and sell models work. So in this case, GU has already fulfilled the buy model, which means euro does not need to, all right? And whenever we get a closure through here, let's say with these three up close candles, let's say we get a closure through this level right here, price closes through it, then we can really expect price to just crash, all right? And that will outline perfectly with the way dollar index is going to move higher, all right? So I know it might be a bit complicated, but once you really start to see how it is meant to be seen or read price, then it'll just become second nature to you, right? You just know exactly what to look for and exactly what arrays you're waiting for, which buy model is in play, which sell model is in play, and it just takes a bit more reading experience, all right? So that is going to be euro for you, and that is dollar index as well, all right? And let's move to NASDAQ, and let me show you another beautiful example here, all right? So this is NASDAQ and ES, great, all right? So with NASDAQ first, all right, what are we doing here? We are really consolidating in a tight range, right? We have engineered liquidity above. what is the engineering liquidity? Engineer liquidity, I'm sorry. We have equal highs, right? We have equal highs right there, and we have this buy side liquidity right there. Okay. So how will you see this in terms of? You will see this in terms of open, low, high, close, right? That is basically how we read price, because that is how true candles form, right? If candles don't form that way, then there is basically nothing else we can use to read price from. So in this case, we have a monthly open. So we have an open, right? That's how you see it. We have an open right there, and we have a low right here. And what should we expect? We should expect a high or a price to move higher, right? That is ideally what we want to see. Let's move to ES at this point. We have the exact same thing here, but we have an SMT divergence, all right, which is key here to determine where Euro or NASDAQ is going. I'm sorry, where NASDAQ or ES is going to push towards, all right? So this will be your SMT, all right? This is your Friday, 26 June. ES, this is your Friday, 26 June as well, right? So we have an SMT divergence backing these lows, all right, which is really bullish, okay? This is really bullish. Now, price is not moving from here to here because of buying or selling pressure, all right? That's not happening. It's happening because there is a crack in correlation where ES really shows us that it's the stronger pair. And this was the level I marked out as well in one of the sessions where I told you ES should head to this high, all right? Because I don't believe that this is the reversal structure, all right? There are reversal structures, high probability reversal structures that do occur, but this is not it, all right? So ES should really expand and push to these highs, all right? So in this case, we have this SMT and we have price close through these highs, all right? We have closed through them. So what does this mean? This means that we have a classic open low right there. Okay, we have an open low backed by SMT and we should expand higher. So we have an open low, high, close, right? Now, compared to Euro, what do you see that's different here? Quite simply put, we have consolidated in the month of June, right? Right here, June 1st, and this is July 1st, all right? So this range right here, what do you see? You see clear consolidation. Let's say you move back here to the month of May. What do you see in the month of May? From here to here, that's all your eyes are supposed to look at. You see expansion, right? So we have expansion, we have consolidation. So ideally, we should expect once again, expansion, right? So with that in mind, we can really be sure, right? Or we can actually expect price to push higher to take out the monthly open, previous monthly open, and of course 7694.5, which is going to be once again a new all-time high on ES. All right, so let's go to NASDAQ. So what does NASDAQ look like? NASDAQ looks weaker, all right? Now, simply put, it's not really the SMT that is weaker. It is, of course, but the way you can do it is you can see that price is already closed above the current monthly open. And you go to NASDAQ, you can see the current monthly open, or July's open in this case, is still quite far away from price, all right? So we have still a long way to go to, which means that NASDAQ is weaker and ES is stronger, all right? Especially with this nice closure above, all right? So I did have one of the comments on my tweets as well, which just asked me, do you think this is going to be the low of the month? And I just checked the charts once again. I was not quite well in the past few days. So this does look like it could be the low of the month for ES, all right? NASDAQ, I will still wait for confirmation. Simple confirmation is going to be price to close above this high, all right? If we close above this high right there, we get a nice closure. We can really expect price to get to new all-time highs on NASDAQ as well, all right? So that is going to be your NASDAQ and ES. Let's actually go to the lower time frames and I can show you how one of my swing trading models works, all right? So I call this the swing trading model here. I teach this in the university, but this is quite simple, all right? So we're just trying to capture the weekly range, or if you're familiar with ICT, you would call this as a one shot, one kill, all right? So what this is you expect price to open first, give you a Judas swing, right? So this is going to be your Judas swing or your false move, right? So this is your Judas swing right there. Price moves against it. So everyone's going to be bullish at this time, but it's going to crash, all right? When it crashes or moves in the other direction, where is price heading to? Liquidity pool, right? So in this case, we have this liquidity pool, price gets it right there. Now look at the reaction once price gets it to, right? See a beautiful reaction there, but that's not the confirmation yet because we're waiting for change in state of delivery. So in this case, we do close up above here during the PM session at 2 p.m. You can see price taps into it, beautiful entry right there. expands all the way higher through, and the target is going to be Monday's high in this case. All right. But the target beforehand would be anytime during these equal highs, right? We have nice equal engineered liquidity here. So price will most likely expand higher and take out these highs, right? So this is one of the models which I do teach. And in this case, we should expect price to get to Monday's high. It's actually quite evident now. It will pretty much get there. And after that, I do expect NASDAQ, if we do close above, let's say this high right there, we should definitely expand to these highs. All right. And that will also push ES to get to these highs as well. Right. So that is your futures right there. Let's move to gold and silver. Now price is exactly the same. All right. So let's say I discussed gold or silver and you don't really trade gold or silver at this point. Definitely nothing to worry about. Price remains the same across all different assets. It's just the way they accumulate, manipulate, and distribute is what will be different. All right. So the open, high, low, close will always be the truest way to read price, and how you view your power of three will just be different across different assets, right? So in this case, let's consider NASDAQ. All right. You will get your power of three, or your accumulation, manipulation, and distribution. You will get that perfectly in New York session. All right. So New York session will give you the perfect power of three for NASDAQ, right? Why is that? Because we have a 9:30 equities open, a time-based news driver. So we have clear accumulation during London and Asia, and we are going to get manipulation or distribution during New York, right? Quite simply defined. But that is not going to be the case with Euro USD, all right? Because for Euro, London will most likely manipulate, and then New York would most probably distribute. So that's the basic key difference on how price prints, right? So in this case for gold, right? What are we looking at? Quite simply put, the exact monthly opens. We're just going to look for fair value gaps and just how price reacts, right? So in this case, you will see that there are larger wicks in gold, right? And here, and here, you can see that. And price moves quite rapidly, all right? That's the only difference. But if you do learn how to read price, you will definitely be able to do it across all asset classes and definitely across all time frames as well, all right? Which is quite important, because when you're in the monthly and the yearly time frames, that is going to be for your investing, and your 5-minute to your 4-hour is going to be for your day trades, all right? So in this case, we have just tapped the monthly open, and as discussed in the previous stream, I'm just going to remain neutral at this point. Do I believe this is going to be the low for gold and we're going to head back higher once again? I'm not sure yet. All right. I do need my confirmations, and that is not what I'm seeing as of now. All right. Moving to silver, we did discuss the same levels for silver as well. We called it out beautifully from all the way here to here. All is recorded in the live stream. Definitely to check them out. But for now, we're just going to remain neutral on silver. All right. We have engineered liquidity right here. Okay. And we have, let me just zoom in. We have engineered liquidity at the lows, and this doesn't look like price will most likely expand higher. All right. I am actually 50-50 on this. So that is a sign that you should definitely avoid building a bias here. All right. So all the way here, we were really bearish. Once we got that, what did we get? Liquidity pool, fair value gap. Now we're going to remain neutral. All right. So let's move to Bitcoin as well. And Bitcoin, we're pretty good here. On the weekly time frame, this is our final objective, right? We did have a good objective and a good move called out all the way from here. I do believe 49,000 is in play. I do believe price should get there. It's just price, all right? Now, if you're trading ICT and you understand how these concepts work with the open, high, low, close, with how these fair value gaps react, you've seen me do this for quite a while. Definitely look to read price in the assets you're not familiar with, all right? So it can be Bitcoin, it can be Ethereum. Just look at how price moves, right? It can be on the 15-minute time frame or the daily time frame, whatever you're comfortable with. If you're swing trading, definitely do stick to the 1 hour and above. If you're day trading, it's going to be from the 5-minute and above, right? So if you're going to learn to read price, definitely look at your other asset classes, all right? But you should stick to trade just one asset, all right? That would be my recommendation for you, because you will really sharpen your skills when you read other asset classes, and you will really understand how to trade when you just stick to your one pair. All right. Now, in this case, Bitcoin just going to remain neutral at this point, guys, nothing else. We have a nice fair value gap. Price will probably get to the 50% of this gap, and then we can push lower. Moving to Ethereum, we do have a dealing range low, and that is at 1.3 or 1.4, pretty close there. And I do believe Ethereum should get there. I've called Ethereum all the way from here to these lows a nice drop here, a nice 50% drop on silver, 25% drop on gold. Really great is just simple concepts of fair value gaps and how you read price with your open, high, low, close, with your opening prices, and definitely SMT and fair value gaps, right? Just to keep it as simple as possible. Now, do you guys have any questions? Do let me know in the chat and I can get them clarified for you. And let me show you a good example as well regarding the power of three and what I was just talking about in terms of how price moves, right? So just as I was saying earlier, we have a clear defined Asia's range, right? Like I said, we're on NASDAQ right now. What is NASDAQ most likely to do? It is most likely to consolidate during Asia, during London, and manipulate during New York or distribute, right? So you can see we have that, both of them right here. Let me just turn on 4-hour candles. Yeah, you can see that. This is really beautiful. We have clear Asia's range right here, London's range right there. What does New York do? New York manipulates below London's low, expands aggressively, right? Pretty clean. Also takes out Asia's high before it moves lower, right? So Asia is a time-based liquidity pool, so price will definitely give a good reaction out of it. So you go to the 5-minute time frame, and this was not really clean, and I believe everyone blamed Trump for the drop here. Definitely not the case, guys. That's not what's happening. Everything is already predetermined. In this case, we've taken out Asia's high, and we form an SMT divergence at those highs, all right? So right there, what is the SMT formed with? ES, all right? So you can see ES has already taken out a daily objective. So in this case, that is your SMT. Price pushes lower. What does it tap into? A fair value gap, right? You can see there, that's a fair value gap. What is price going to do after it takes out a high and after it taps into a fair value gap? It's going to push lower, right? Where is it going to move lower to? To the next liquidity pool. In this case, it was London's low. That is the drop, all right? So if everyone blames Trump and says that, okay, there was a news event there, that's why price moved lower. Definitely, price moved lower aggressively because of the news event, but it was eventually going to get there, all right? So we get there, that is your manipulation wick or manipulation candle right here. Expands higher, so you can just ignore this candle right here, all right? So this is how you do it. Whenever you see a really large wick, you ignore the entire candle, all right? So this candle right there, 1030, that is the candle you ignore. Then you see what price does right after. It pushes lower, probably takes out these lows, right? That's how you're supposed to see it. So price takes out these lows, and this SMT has already been fulfilled. This is the sell model that fulfills price. So now we're going to push higher. In this case, what do? Price expands high with multiple fair value gaps. So what the best thing you can do is just divide the range by 50%, place your entry at the 50% and just let it ride, all right? So clear power of three, just as I explained. This is what NASDAQ does, right? Now if I just push to Euro, what does Euro do, right? You can see New York is basically nothing in this case. We did reverse, but then price pushes lower, right? Asia expands, London consolidates. Euro was quite difficult in the previous week. So these low resistance was what we're looking forward to, and price got there, so which is pretty great. And GU as well, you can see it was quite bad in the previous week. So last week's price action was not really great for day trades, and we did get about 2 wins, right? So I did post both of them as well. So we had 2 wins in the university as well, which was on Thursday and Friday, and it was pretty good. But in terms of if I have to rate price action, it was definitely not great, all right? Now the one single thing I'm looking at when I rate price action is how the Asia session performs, all right? So whenever I see Asia session this way from 8:30 p.m. all the way to 11 p.m., you see we have expanded really aggressively. That's just my sign to just stay out of the market, all right? It's not going to be a good day. It's just going to consolidate a lot more than usual. You'll probably blow your accounts by risking too heavily because price just doesn't move at one point, right? So that is really how I rate price. And in this case, you can see even Asia session did consolidate after quite a while for NASDAQ, and we did react quite well. So you can see the other sessions, it didn't really work out that way. Let me just show that to you as well. All right, we'll just check it out for the entire week. Yeah, see right here. This is definitely not a good session on Wednesday. We just expanded here. London consolidates. We manipulate prior to New York open and we expand. Again, a small retracement to fill this fair value gap and we expand once again. All right, definitely not great price action. Move to Tuesday, we have clear Asia accumulation, right, which is pretty good. But you can see what London does. It just expands really aggressively. And you can't really take a trade during London as well because we didn't manipulate above. This was the entire manipulation, and this was New York, right? Definitely low probability. There's basically nothing we could do here. And that's what it was, right? And then you move to Monday at this point, right? I'm sorry, this is going to be Tuesday because your Tuesday is open. That was Wednesday. You can see here as well during Tuesday here, what do? We expand during Asia, so London consolidates, right? This is just classic price action, guys. It's always going to repeat that way. We are going to expand, we are going to consolidate, then we're going to expand once again, or we're going to reverse, right? But the expansion and consolidation will never change, all right? Because that's how price prints. So in this case, we have expanded here, London consolidates in a tight range, and New York expands as well. Now this is pretty good, and we could take a trade here, but we didn't manipulate quite well, all right? We did manipulate within the session, but that's not what I definitely like to look forward to. I like to see probably London's high get taken out, or price just returns into a fair value gap of some sort here, and then I can look to frame a trade, all right? That's basically what I prefer, and I do believe that that does work pretty well, all right? And let's just get to Monday here. What do we have here on Monday? Asia expands, right? See this range right here? We've really expanded through from here all the way to here. So about 300 points during Asia, which just leads to your next session, consolidate, right? I'm not just telling things out of here. I'm just showing you exactly how it is, right? We have clear consolidation here. And once again, I would definitely look forward to take a trade during New York if we would probably take out London's low, and we didn't, right? So we didn't take it out there, and I just missed the move here, and we just targeted Asia's high, right? That's where the algorithm will look forward to push higher and replace these orders, and that's what it did. All right. So that's going to be a quick review of every single thing I'm looking forward to. I'll probably conduct a bit more live streams if you all are interested. So definitely drop a like or tell me what you'd like to see in the chat as well. I'll definitely consider that. And let me just have a look at the chat before I end the stream. All right, what about GR40? And what about GR40? All right, there's a couple of requests for GR40. I don't really trade this pair at all, but I'll definitely have a look forward. And the monthly time frame is where I like to start, all right? So what do we have here on the monthly time frame? I'm sure you all can read this quite well now, right? Even if you're a beginner, this should be really clean and simple to you. We have taken out clear highs, right? This is your buy side liquidity, and we have engineered liquidity, right? So we have a monthly open on July, and we have manipulated above, right? So we would consider the month of July to manipulate, right? So you can probably see it this way. We have clear manipulation above these highs, right? Let's go to the weekly time frame, and what is price done? We have really just taken out a previous week's high, right? So we've taken out a monthly level, right? Which means we are bearish, and we've taken out a previous week's high, which means we're bearish again, right? Go to the daily time frame. Do we have confirmation, right? What is the confirmation? The confirmation is going to be a change in state of delivery, all right? So does that mean the price is going to move lower, or where does it want to head, all right? So in this case, we have your June's opening price right here. Price manipulates above. So you will look to confirm your change in state of delivery. In this case, it's going to be all the consecutive up close candles, all right? It's not just the one, okay? This is not your CISD, all right? I'm not sure where you learned that from. If you did, that is completely wrong. That is not your CISD. That doesn't confirm price is going to move in the other direction. CISD is going to be all your consecutive bullish candles. So in this case, it's going to be this one, all right? Unfortunately, we do have about 1, 2, 3, 4, 5, 6 up close candles, but we need to definitely wait for price to close through it, right? So in this case, let's say price closes through the CISD, we can definitely expect price to get to these lows, all right? So that would be my take on GR40. Hopefully that was good for you. What is your second question? All right, Weeds has a question, your analysis on USD GPY and USD CAD. All right. I believe we did discuss USD GPY in the previous stream as well. So let me just check that out. Yeah, right there. All right. So taking on from the previous stream, I did say that price is going to reach these highs, right? So I believe we have. And on the weekly time frame, you can see we did react quite well from the level I outlined, right? Now, why is that? It's not because it's a magic level of some sort. It's just because that is a true liquidity pool, all right? Usually everyone will be bearish there and bullish there. So whenever price gets there, it's going to give you a nice reaction. So in the terms of weekly time frame, you have right there. What does price do here? Just expand through it, pushes lower. Where does it react off of? Your fair value gap right here. Okay, we have a nice fair value gap. Price reacts out of it, reacts once again, pushes higher. Where does it get to or distribute towards? The monthly open, and then we move lower once again to another fair value gap, right? That is all what is there for USD GPY. But if you're going to trade this, or you want to really frame a nice direction on this, I would say it is most likely bearish, right? That's what I would see this as, but there are no clear confirmations for price to move lower as of now. All right. So what is the confirmation I would ideally look for? I would look for price to close through this fair value gap. All right. That's basically what I would look for. I would probably target this monthly open and this flat opening price. Okay. This flat opening price and the monthly open right there. That is basically what I would target. All right. So let me just have a quick look at USD CAD and then I will end the stream if there are no questions. If you have any questions, do let me know in the chat, guys. So yeah, USD CAD have just tapped into the weekly fair value gap. So I would most likely be bullish. All right. That's what I would do for this week because we have tapped into a weekly fair value gap and we have a clear defined high as well. All right. Which is going to be in the form of equal highs. All right. So we just zoom in and just consider this range right now. Go to your lower time frames. So in this case would be the 4-hour or the 1-hour time frame. So you can see this. What does this look like? This really looks like price has taken out one side of the range, right? One side of the range right there. And we should probably push high to take out the other side of the range, right? On the 1-hour time frame as well. Yeah, we do need confirmation. We do need price to push higher. And then you could probably use the swing trading model I was just discussing. And you could probably target these highs, right? That would be great. All right, please, if you're waiting for a manipulation for an entry, do you wait for a previous high run or a session run? Because sometimes the session doesn't create a high to be taken. Okay, that is pretty good. That is a pretty good question. All right. So what I would say for that, Weeds, is when I'm waiting for a manipulation for an entry, I want to see it occur on the session highs or lows or the daily highs and lows, right? So it's going to be either or. So it depends on what power of 3 we are trading in during that session. All right. So let's say I open NASDAQ, right? So that was a great example. I'll just go back to it once again. So we're just trading NASDAQ at this point and I'm on the 15-minute time frame. And if I'm looking at price, all right, am I waiting for price to react off of the previous day's high, which is going to be right here? Or am I going to wait for price to react off a previous session high, right? If that is your question, in this case, I'm just waiting for time to align with price, all right? So the way I see it is we have 930 open right here, all right? And price pushes higher, takes out Asia's high, right? And price pushes lower right after that on the 5-minute time frame. You can see we have a CISD, we have a fair value gap. That is sufficient enough for me to take a short, all right? So you need to determine how your setup is and how you'll take a trade, right? What confirmations you're looking for. That is quite important. So in this case, we have taken out Asia's high. We have a CISD. We have a fair value gap. That is more than enough for me to take a trade, all right? Now, if you're looking for a previous day's session to be taken out, you don't really get that here, right? And in this case, if you like to trade off of your daily highs and lows, this would be a missed trade, all right? And that is all. That's completely fine, right? Just follow your rules. It's a missed trade. Move on. Now, if you're waiting for session highs and lows to be taken out, then that is the model you can use to take a trade here. All right. So manipulation is definitely necessary to take a trade, right? Without manipulation, I definitely, I possibly have never pulled a trigger, right? Without manipulation being taken out. You need manipulation to be taken out. You need your confirmations right after that, and you need to follow your model. And right after that, you can definitely execute your trade, right? Until then, definitely stay out. All right. So you should definitely consider trading GR40. No, I'm quite happy with NASDAQ and Euro. All right, that's basically all I trade, which is pretty good. All right, so how do you frame your daily bias? I've actually discussed that before, but I'll actually go through forward to it or probably make a video on it in the upcoming days. But for now, guys, that is going to be the end of the stream. Hopefully you all found this quite insightful. I shall speak to you all once again in next week. And if you all want more live stream sessions, definitely do consider dropping a like on these sessions and we'll consider doing them more often. All right. So do take care and stay safe. I shall speak to you all once again in the next week. All right. Bye-bye.